Welcome to The Disruption Is Now. Join us on this enlightening journey as we explore how AI is impacting our jobs, careers, lives, and the human experience. Each episode, host Greg Matusky will converse with visionaries and innovators at the forefront of AI, diving into its challenges, opportunities, and impact. So buckle up as we venture into the heart of disruption, and together, let's unfold the future.
Well, welcome to another episode of The Disruption Is Now, where we talk about all things AI and how it's impacting commerce, communications, and our culture. And today we have a guest who's been at this for 6 years. He comes from Stanford University, had worked for Lyft and Rent the Runway, is a data scientist, and now has a company called Cardless, which is a branded credit card company. Michael Spelfogel, CEO and founder of the company. Thanks for being with us today.
Hey, Greg. Thanks for having me.
So tell me a little bit about your journey and how you ended up here, your world in Stanford, what you studied there, and how you got into data science, and what it's meant to your career.
Yeah. Well, I think everything starts from my upbringing. I was born and raised in New York. I grew up in a suburb of the city called Long Island. And it was a somewhat insular community, even though it was pretty close to New York City. I wanted to travel and go as far away from home for college as possible. My parents put down their foot when I started to apply to schools internationally and said they'd only help me pay if I could stay within the US. So naturally, I went to the furthest place possible from New York in the continental 48. So went to California and Stanford. And when I got there, ironically, I started to get homesick, wanted to go back home for the holidays to see family. So I applied for my first credit card. It was a Delta Sky Miles card. And the sign-up bonus was large enough to get a free flight back home. And I thought that was amazing. So that was my first sort of foray into credit cards on the consumer side. I started reading blogs, learning a little bit more about this whole ecosystem. And it turns out there's a very rich relationship between consumers, their financial service providers, and brands that they know and trust. So the kind of seeds for Cardless, I think, were planted a long, long time ago.
Now explain that to us, because it is a branded credit card where you build credit cards for companies. I may not have said that right. Say it in your own words and explain exactly what Cardless does.
Cardless helps brands issue co-branded credit cards. The cards have the brand's logo on the front. Maybe it's Qatar Airways, maybe it's Alibaba. They have the mark of the network. So we work with Amex, Visa, and MasterCard, all three major networks. And Cardless runs the technology, the underlying infrastructure, the servicing, underwriting, lending, all the things that make a credit card. But we're able to deliver that end experience to consumers and partner with some of the most influential brands in travel and e-commerce and other spaces to build that product together.
Now, you've been at this for 6 years, I understand, and you recently raised, was it $30 million in capital?
Mm-hmm.
Do I have that number right? In November
That's
of 2024, if I have the dates right. And had you thought about being an entrepreneur all your life, or was it going to Stanford and being in the heart of Silicon Valley and startups and technology? I mean, where'd that spark come from?
It's funny, I didn't know that I wanted to be an entrepreneur until it kind of hit me in the face. I was exposed to a lot of that early on. I have entrepreneurs in the family. Went to Stanford, saw that all around me, but I had worked my whole career before starting the company as a data scientist. And at Lyft, I was a data scientist. On the mapping team, I was writing algorithms for driver-rider matching to optimize things like that. And they happened to be doing a credit card project at the same time to launch a credit card with this bank in Connecticut called Synchrony. And watching at first from afar how difficult that was, getting a little bit closer to it and knowing, the value of credit cards from a consumer perspective, it struck me as odd that something that was so valuable to consumers and for businesses was so hard to do. And that's really when the entrepreneurial journey started.
And what was hard about it? What was the friction that you found?
The challenges Lyft faced were a multitude, but it's hard for a young modern tech company that is growing really quickly to work with an old legacy bank. And all sorts of problems pop up, from the way the bank underwrites to the cadence of marketing communication and interaction with the customer, and most fundamentally, the technology that the bank uses, the legacy mainframes they're built on top of, the 18-month cycles to launch a new card versus doing that in a matter of days or weeks. So everything has process, and sometimes unintentionally causes a lot of consternation for the brand partner.
So that was the old school, and then a lot of the friction came from that. You had a clean sheet of paper, I imagine, when you started this. Tell me a little bit about how you built it from the ground up with a data component to it.
We had a clean napkin and we started scribbling on the front and then the back
There
of
you
the
go, at a
napkin.
restaurant.
Yeah, it was at a Whole Foods in Bryant Park in New York. So I still remember, it was over 6 years ago now. But we thought from first principles. Credit cards are physical pieces of plastic. I met my co-founder Scott in China. We were studying abroad there from Stanford. And one thing that fascinated me, having lived in China earlier, was they moved completely from a cash-based economy to a cashless economy in a matter of years. Completely changed. And I think one day that change is going to come to the US as well. So one of the reasons we called ourselves cardless is because we think in the future people will not use physical credit cards as the payment tool. Although I think people always need to borrow money. So having credit, accessing it, and building financial products around it is super important. So going back to your question, how did we build this from the ground up? It was number one, always have the customer in mind. We want to make this an easy, sleek, seamless experience for the end customer to get approved for the card and then use it for their day-to-day needs. But at heart, we're a B2B company. So most of the products we build today are supporting the brands to better understand their customers, to engage them, to retain them, and win top of wallet in a way they couldn't otherwise.
Go deeper there for the brands. When you say engage your customers, um, how are you using the data to create this more engaged relationship? And what does it mean to me as the consumer on the user end?
So it means two things. The first is that we are very intentional with what credit card offers we put out into the ether. If you see a credit card ad for Qatar Airways, we've thought about exactly what your relationship is to that brand, to that airline, when we try and acquire you. The offer we give you, the terms of it. With Alibaba, we have financing, so you can actually pay over time for certain purchases, right? So
And was
we
that
just
something that you saw in the data that that would be an effective offer or benefit for users? Did that come from Alibaba? Did that come from you? That's interesting to me because that just shows you the type of benefit that is most meaningful to that audience. So, what was it about that that made it customized for Alibaba and their customers?
It was an idea they had actually, and we really liked it. So everything we think about, we do first, focus groups asking users for feedback, and then we love to give optionality. So with Alibaba, you can actually select between getting 3% back on their site or 60-day turns. You can literally toggle that on or off, and that empowers the customer to make the choice. What matters more to me right now? Cash back on this purchase or financing? Maybe they're a business owner and need cash flows, right? So that's extremely meaningful to them.
So I cut you off, and you were talking about briefly. You were talking about cashless societies and economies.
Yeah.
What do we have to do to get to that? What do you think will allow us to be like the Chinese economy, that we don't carry these credit cards in our pocket all day and can actually transact less with less friction in the actual act of it?
So there were two or three really key events of the last decade that accelerated that change. And you can look to foreign countries for examples of this. In India in the 2010s, there was this demonetization movement to get rid of small bills and change and larger ones. for a variety of different reasons, but that shift happened really quickly. In China, the pandemic greatly accelerated that. So today, if you go to Shanghai, most people are paying with Alipay or WeChat Pay with QR codes. Could still be tied to a credit card, but not a physical card anymore. So I think there are, exogenous factors in nature that accelerate those things, political shifts or changes. And when it comes to the US, what I think, the biggest factor is convenience for the end customer. The US has, the largest economy in the world. The per capita income in the country is very high. People are very discerning about the financial products they use. So the more ease of use and acceptance companies like Cardless enable for brands and customers, the quicker that change is going to take hold.
Now, talk a little bit about any type of artificial intelligence that you're using that you think will be more used in the future. I mean, as a data scientist, those are very closely aligned. I've had the honor of interviewing data scientists and machine learning experts, PhDs, academics. From your perspective, where's the great nexus here?
Yeah, I mean, causal inference is at the heart of everything we do. I'm lucky to work with Scott, my brilliant co-founder. His background's in AI and behavioral economics from Stanford. So we
That's
really,
interesting.
yeah, he'll tell you a lot about the human decision making system and the computer one, and where those align and where they don't, perhaps. Um, but I think for cardless, what that means is really two or three things. The first is be at the forefront of servicing customers using AI-enabled tools. So getting higher containment, automating things so that you don't have to call in when there's a problem with your card. And then kind of taking the natural conclusion of that is all of the data that the cards create. Fraud indicators, the spending behaviors, putting that into models to make sure that we can give people access to credit when it's really them. When we think there's fraud or bad actors, shutting that down really quickly, knowing when to add friction, when to take friction away, and ultimately how to better serve the customers with those AI enabled tools.
I think it's interesting, in my own experience, with credit cards. That's not getting better right now. And from the ones I use, it's getting worse. It's getting worse to use harder to use a credit card. False positives. Yeah, that's right. False positives.
False positives, yeah.
They trip me up all the time where I get cut off. The call center is a mess of the company that I use. Trying to get any kind of service. I don't want to name the card, but it's very difficult. I mean, this morning I had to activate 2 cards as an example, right? For 2 employees of mine. And you'd think I could do it online. But for some reason, I have 2 accounts. Same bank, right?
You have to
Same
call
institution.
in and you have to, yeah.
Right? And I go on and I go to my first account and all the users are listed. I go in the second account. It's the same damn card. And they're not listed. On the web page, I cannot find the list of users to activate it, which is crazy. I don't understand why they'd be different. But anyway, I call in, and we go through this long process. I mean, I know the on-hold music by heart because I always call at 7:30 in the morning.
That's never a good thing when you know the on-hold music by heart. So.
Right. I always call at 7:30 in the morning because it's less busy, and I usually get an English-speaking representative instead of someone from around the world, which expedites things. I don't mean to be closed-minded, but it does expedite things. I went through it for 10 minutes, and they tell me at the end, "Oh, your card's activated already." When I started from the beginning, and I told them it was for 2 team members of mine, the whole time they were tracking against my card. I know it's activated. It was the 2 new cards that I told you about. I mean, what kind of opportunities does that present you when, in my experience, it's not getting better in a lot of this?
I mean, I've heard very similar experiences and pain points from a lot of consumers, particularly when you go away from the 3 or 4 biggest banks in this country. there's kind of a long tail of mid-sized banks, even larger national banks that, serve customers, but really struggle to do that. And their NPS scores are low, really, really low. And the cost to do that servicing is also really high because they fail to automate. And I think up until this point, 2023, 2024, prior, um, there was not an incentive for those banks to change. There weren't fintechs and startups that were knocking at their door. And the prevalence of AI technology to build and automate a lot of the things you just called out were really hard. And banks will struggle to adapt to that. So I think if you project out 5 or 10 years in the future, what you're going to find is that most consumers still have similar financial products. The experience hopefully is better, but those financial products will not be issued by brick and mortar bank branches, places you're going in person or on a call center to interact with, but with brands that you know and trust, and other fintechs that really understand what the customer needs and are using AI to automate and make experiences better for consumers.
Now, talk a little bit about the power of the brand. What is it that drives consumers to associate with these affiliated brands? Is it the opportunity to badge themselves? Is it the opportunity to? Is it how familiar they are? What drives them to want to carry that brand around and use it over the many others that are available?
I think it gets to your identity. Most people don't have dozens of credit cards like I do. Most people have 2 or 3 cards, and the one they pick and use most regularly is very related to who they are or how they spend their time, and certainly how they spend their money. So, I love talking about Delta. It's probably the most prominent example of, the number one most successful credit card, co-branded card out there. 1% of US GDP last year was on a Delta American Express
That's
card.
amazing. I had no idea.
It's the scale is immense, and when you talk to people that use that product every day, they might not get on a plane and fly Delta every day or every week, but they wanna earn towards a vacation with their family over the holidays, right? So there's a deep emotional tie between this action of taking this credit card out, spending on it, earning points or status so that you can earn up and do something that you love. And we wanna tap into that, predilection, whether it's travel, whether it's shopping, whether it's living a healthier financial life or physical, real life. And I think there are a lot of different products that can do that.
Hey, at this point, I want to conclude just with one last question, Michael. I appreciate your time today. And looking back, right? You weren't when you're young. You weren't pointing to be an entrepreneur. You kind of came to this later. It's been a success. What's been the most difficult part of that journey, do you think? And what will be the most difficult part as you move forward?
Yeah, there was a interview with Elon Musk a year or so ago, and someone asked him, do you have any words of encouragement for an aspiring entrepreneur? And he said, if you need words of encouragement, don't be an entrepreneur. And I think that sort of sums it up. There are hard things you do every day. I think the problems get harder, and your propensity to solve them also gets more meaningful. Um, if I had to pick one thing, I think it was finding product market fit, and maybe that sounds cliche, but we struggled for a really long time building credit cards in the sports space and other areas where we thought there was a lot of passion, and there was maybe for the underlying brand, but that didn't actually tie to success of the card product. And overcoming that nearly killed the company. We overcame a lot. And most importantly, we kept learning and kept growing. And I think we're a much stronger company today because of those really challenging moments and
And
experiences.
what led to being able to overcome it? Was it an aha moment? Was it the right client? Something that clicked?
I think what led to overcoming it was grappling with reality. We always knew and thought about the metrics that would result in success. And it was clear those early products didn't have that secret sauce. And at first we were telling ourselves a different story or explaining it away. And the cold hard truth is that, the reality you can always measure in dollars and cents and numbers. And I'm a data scientist at heart. So the logic always prevailed, and that helped us overcome that and realize that we built a great product. We just distributed it into the wrong market, so we could pivot that into travel, into e-commerce, into other spaces where credit cards historically had been much more successful. And once we did that, we found the same was true for us.
Well, you have been successful, Michael, and I wish you more success in the future. It's a great story about your company, and hope to watch you a lot in the future and see where it goes. And I want to thank you for being with us.
Thank you, Greg. It's a pleasure. I hope to talk soon.
This podcast is a production of Gregory FCA. If you enjoyed our discussion today and want to continue exploring the transformative power of AI, please check out more episodes and subscribe wherever you listen to podcasts.